Hello and welcome to Pro Trader Strategies market commentary for Tuesday, February the 14th. Happy Valentine's Day. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these daily market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, let's get this on. We've got a little bit of economic data coming out today and a couple Fed governors speaking. Right now, Janet Yellen's testifying in front of Congress. We also have later on today FOMC member Kaplan speaking. So that's at about 1 p.m. Eastern, so coming up here pretty shortly. But anyway, across the pond, we've got German preliminary GDP came in slightly lower than expected at 0.4%, was expected to be 0.5%. And then German CPI came in right in line with expectations at 0.6%. Then we also had Great Britain's CPI coming in at 1.8%, was expected to be 1.9%. Core CPI came in slightly lower than expected as well at 1.6%, was expected to be 1.7%. They also have a couple of different aspects of the PPI, which is Producer Price Index. They have the input cost, and it came in at 1.7% higher than the expected 1.0%. And then the then the PPI output came in at 0.6% versus 0.4%. What does that tell us? It tells us that the inputs are greater than the output, so that there could be a little bit of disconnect there, or they're expecting it to start to ramp up rather soon. So then here in the United States, we got NFIB, which is National Federation of Independent Businesses. Small Business Index came in at 105.9, was expected to be 105.1, so pretty in line with expectations there. Here we also got our PPI numbers, Producer Price Index, came in at 0.6%, was expected to be 0.3%, so higher than expected there. Then core PPI came in at 0.4%, expected 0.2%, so slightly higher than expected there. That could indicate some inflation, as with the PPI in Great Britain, they're showing their input costs versus their output costs, and when the input costs are much greater than what they can charge going out, that's actually pretty bad for the businesses. Shows that probably people aren't going to be getting a lot of raises and or bonuses. So those kind of levers and pulleys going on there. And I mentioned we have Fed governor speaking later on today and Yellen speaking now. Anyway, on to the overall markets. We've got crude oil right now up about a quarter on the day, well off its highs from overnight, but back below this value area low. We settled below there. That is more of a bearish tone, but it could get negated a little bit just because we're stuck in this range right here, right in the low to mid 50s for all intents and purposes. So could just see us continue to trade sideways there. Gold futures giving back a lot of market movement today as the overall equities are pushing higher, making new historical highs again today. But we got gold down just slightly on the day by 40 cents. Then on to the bonds. Bonds obviously going to be hurt by Janet Yellen speaking of continually raising rates. As the stock market is at all-time highs, she's basically throwing it to government to try and figure out a way to make homes more affordable, despite the fact that they're going to be increasing interest rates. That makes homes less affordable. So you can buy a smaller home for the same price as if you had lower interest rates. So those levers and pulleys going on right now, and that's what most of the talk is about with Janet Yellen right now. Then we have the Dow Jones Industrial Average. As you can see, another new historical high. As a matter of fact, we are right on that high right now, maybe about a point off of it, but continuing to creep higher. And we're starting to get these like little gap moves, which really, to me, is starting to indicate as a top where there's just not a whole lot of selling pressure, which allows that market to kind of incrementally start to jump higher. We could easily see a big pullback coming with that kind of market movement, I would say, and very little volume that we've been seeing. The NASDAQ right now slightly in positive territory. Again, new historical high today to print that in, well off of the lows of the day that we kind of printed the lows coming into the day, and then the market just has been rallying ever since. We'll see that in the E-mini S&Ps here in a minute, but this is the E-mini S&P on a daily chart, up 1.5 on the day. But if we look at the breakdown of the E-mini S&Ps, overnight we were pretty calm and collective. Then into the morning, the market really started going down to push into the lows. Pretty much when Janet Yellen started talking, the market got a little bit of a relief rally and are there very close to the highs, or are at the highs of the day, but very close to making a new intraday historical high today as well. On to things that I've done. Oracle, ticker symbol ORCL. I talked about this yesterday. Was trying to get out of this trade. Was the butterfly, the call butterfly that I had done, and it was on the short call butterfly webinar, and I did the February 36, 39, 42 call butterfly, and I originally collected $1.70 for that. Was able to cover it back for $1.02 yesterday, so ended up running after that one to get it filled by the end of the day. You probably could get filled very close to what that is right now, as a matter of fact, with it being on the highs of the day, probably about where I got filled, I would think. Or you can let it ride out a little bit longer, but I'm following the rules of taking 50% of what the max profit potential is on that trade, so that's why I decided to cover that. The only other thing that's going on right now is I'm kind of looking at, earnings. There's a lot of earnings coming out, but the only one that's really kind of getting my eye is Pepsi, ticker symbol PEP. They do have pretty low implied volatility for an earnings trade. The market maker move is only about $1.80. As you can see in the last few earnings moves, they well outpaced that $3 kind of range there. So that's close to double what the market maker move is predicting for this one. I don't know if I'm going to play it. It's going to be a game time decision. So follow me on Twitter at Wolfman's blog. If I tweet something out there, that's going to be your indication that I've done something. Otherwise, you can wait for tomorrow and see what we got going on. Friday's webinar is going to be on the broken wing butterfly. So check that one out. It's a great way, especially when the market's continuing to move higher. We can eliminate our risk to the upside with this type of butterfly. And I'm going to go through all my rules as to how to set that up for directionality purposes in order to set yourself up for a higher probability of success. All right. So go to protraderstrategies.com and sign up for that. That's all I got for you today, other than if you can't take that, take it easy.